Happy mortgage market and you in full, clearly raining cold. Chris Bettis, Fluent Mortgage, market fluently. So this is going to be kind of a combo mortgage market and you, and truly an alert, okay? Different format, not lots of minutia, not lots of reports. And I like to try and stay positive. Most of what I'm going to talk about is going to be seeming doom and gloom or negative news. But I want to emphasize, and you can see on the screen, right? There's always opportunities. So that's what I want you to think about, is not the negativity or the report or the data you're hearing. Is how can I leverage this? How can I protect my client? How can my sellers or my buyers, what do they need to know and how do they need to pivot based on the market today, right? So everyone wins. There's always opportunity. So unless you've been in Iraq or your bankers and brokers just don't inform you, we've lost almost 0.25%, or rates have jumped almost 0.25% in the last 2 business days. 0.25% almost in 2 business days. So here's really the triggers that caused it. And we've been talking about this for months and months and months and months. So to kind of recap the full thing in case it's going to your consumers or your borrowers, because of COVID, we did some very unusual things. We know that, right? Specifically to mortgage and rates. So the Federal Reserve was buying a ton of bonds, artificially buying down long-term rates, mortgages. Okay, that's the bond market purchase. There's 2 different things. The other thing that they're doing is prime. That's short-term money. That's what banks borrow at. That's for your cars. That's for your credit cards. That's another factor. So usually when we see hyperinflation, even 2% equals raising rates, right? Slow down bond market purchase. We're at 8.3. Usually would have been skyrocketing them. What we said is because of the unique nature, the place we've been in before, we're going to look to jobs, okay? Well, almost 11 million job openings. Unprecedented, never seen anything like it. So with those 2 factors before us, it was, are we going to destroy our future to try and make today a little bit easier? So that's the question, right? Tighten your belt today or give yourself a really bad future. So Europe. Worldwide, we're going through this, right? This is a worldwide phenomenon, worldwide event. Europe was very similar to us, exactly where they're at positionally. And we saw last week, they just made the exact move that we've been waiting for. We've been watching, we've been telling you it's coming, right? So huge alert, it just happened across the pond. We know it's coming, right? We told you this last week. So a few of you took advantage. A few of you got into contract and didn't lose all that money. A few of you locked in your interest rates, got your refinances done, and won. Like I just finished my 1.75% refinance. So thankful. Thank you. Unbelievable. Well, on Wednesday, the feds just did exactly what we were talking about. They signaled it's coming to an end. Okay? So they said November, December of this year, they are no longer going to be artificially buying so many bonds. And what does that do? Raises short-term rates. We saw it in reaction in the market immediately. Rates started skyrocketing. In addition to that, not years away, but they're going to start raising the federal rate, prime. Again, remember, uninformed people, you're no disrespect, but you're lower level and people in terms of intelligence in the banking model who don't really study this stuff are going to say, hey, rates aren't jumping until next year. That's short-term money. That's not long-term money, right? We know this stuff. Again, we already saw it jump 0.25%. Bond buying products and prime, totally different. All right, so again, we've seen 0.25% in 2 days alone, okay? 2 business days. First off, a tool. FluentMTG.com, from your phone, from your website. You can see it every day, super fast what's happening. Literally, this was as of Wednesday night or Wednesday, and then as of today or Thursday, 2 days. It's $10,000 less house if it's a $400,000 home. If it's an $800,000 home, $20,000 less house to you today, okay? Here's a trigger. And if you need it, we can give you this visual, this image, this PDF. So, and they're talking about potentially higher than just a 1.5% jump, right? We're talking about potentially up to a 2% jump potentially. But as an example, as a buyer, let's say the rate was 2.25, Thursday's news, you would have been buying this house, this 450 for the same payment. If rates go all the way to 375, this is the house you're getting, not this, right, buyer? You have $80,000 less leverage. If it goes the full 2%, you have $100,000 less house that you can afford today. What now? So there I am. There's the data. Told you it was coming. Unfortunately, we were right. We knew the 0.5% jump in January was coming. We warned you on the 3rd. It happened the 4th, 5th, 6th, etc. Just kept sliding. We knew about the 0.25% jump. Again, what are you going to do now? So if I'm in your office here soon, let's brainstorm. Let's talk about it. I know I'm down south in Roseburg tomorrow. You know we're going to be talking about this. So we're going to figure out, how do we win? What is the opportunity? How do our listings and our sellers win? And how do our buyers, the people buying homes, win? Hope you have an amazing day. Chris Bettis from Fluent Mortgage. Please take advantage of this market. It is volatile today and there's so much opportunity. Bye-bye.